Hey, thanks for tuning in. This is another weekend review for the week ending September 23rd, 2022. We're looking at a quarterly chart of the S&P 500. Big question for everyone to ask themselves. Has the secular bull market ended? From where I sit, I don't have enough evidence to answer that question, but this sure looks like an uptrend. And if we take all available time, you can see that as long as she stays above this green line, the trend continues. And really, we could even use this purple line, which is the 10. So I like to try to keep this stuff real simple. She's at the 10. The 10 is 39.30. She closed below the 10 last quarter. Is looking to close below the 10 this quarter. And it's quite possible that you're about to get a 510 bear cross on the quarterly for the first time since it fired bull back in April of 2010. So if you're a quarterly investor and you've been long the S&P 500 since April 2010, then you should be looking at this signal very, very closely as we come into this Friday. I'm going to zoom in a little bit, take a look at the weekly. As you can see, we've got this bearish outside reversal candle that was confirmed. They closed below. So the way I view that is you tend to look for 3 to 5 more candles after this candle of downside. So it's entirely possible that this thing is going to collapse very, very quickly from here. That's the first thing I wanted to say. It's entirely possible. But that hasn't happened yet. Okay? You have to keep an open mind. And when you zoom into the daily, we have the TD99 count. And it closed below the bottom of the bands. All right? We don't have any divergences here. I mean, maybe you got a bullish divergence if you take it, all the way back to this low here. All right, but more importantly, you've got a TD9 and a double bottom. It's that simple. You don't need to overthink this setup. Now, if price gets and stays below this level, we have something else going on, and that opens the idea that this bull market is kind of over. Now, why do I say that? The monthly 40. You don't want to get below the monthly 40. And let's just zoom in here to... Oh, that looks horrible. Oh, this is why I don't like Thinkorswim that much. Either way, on the monthly, we've come into the 40. We rallied it. And now we're back into the 40 in the bottom of the bands. Remember, the bands contain 90% of price action. So there's a 90% chance that this was the low and that we're going to go back and forth inside the bands, stuck between 42.68 and 3600. That's the high probability bet. And the more important note is that you also have a TD9 buy count on the monthly. So as we get closer to the end of October and the beginning of November, which is the midterm elections, there's a high probability that even if they do break down and liquidate into October, that's the low. Full stop. I know I just said, well, wait a minute, the quarterly charts. Okay, that's entirely possible. But it's also possible that this is a Harami pattern, a reversal pattern. So we'll see. Way too early to have any conviction either way. But coming into this week, this quarterly, the monthly, All of that is very, very important. Even if you go into the hourly, we've got a little bit of a divergence as we've come into this low, but not really, right? So you have to respect the risk here. That's all I'm trying to say. No one has a crystal ball, okay? But if you take a weight of the evidence approach and you look at all the evidence, right? Momentum is down. There's no doubt about that. But you're oversold on the daily. Momentum is down on the quarterly. No doubt about that. And you even have a momentum bearish divergence on the quarterly charts. All right. Now, if you want to take some Elliott wave point of view, this being a 1, 2, 3, 4, 5, this would just be your ABC. And the target really could be down here at 27 to 22. That's entirely possible. I got another one for you. Let's get really bearish for a second. What about, oh man, Thinkorswim doesn't have, well, it's basically 1981 was the start of this bull run. What if they're correcting all of that move? 1924. Right? So, this was the last correction we had on a quarterly time frame. Like a real big correction. And this is a flat. This is an ABC flat. So if these are alternating, we should be looking for a zigzag. Here's your flat. We should have a zigzag up here. Right? 1, 2, 3, 4, 5. That's the best case scenario, but even that scenario has a ton of pain. So no matter how you look at this, there's a big chance that we're going way, 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 way lower from here. Okay? I just want everyone to be clear that that is a high probability event. Okay? But as long as she stays above 36.39, and quite frankly, she could even break that low in reverse, the double bottom setup is valid, and that the risk reward favors bullish entries to start the week. Now the question becomes, and we can go into this daily chart, and you can see an ABC structure in both direction. I'm not going to label it. We're just going to use the fib extension tool. And so there's definitely a possibility that this is an ABC up, ABC down, and then you start a 5-wave move. And that 5-wave move could have a target of 43.84 all the way up to 47.74. That's the bull case. That's still valid. There's no reason that's not valid. This is how every big move starts. Now, we have to look at bonds. Nothing. There's literally nothing here except this. So maybe the bottom of the bands in 101 or 100, that fat 100 is the level. But from where I sit, no one's buying bonds. Okay? And TNX is breaking out. And TNX could go for 2 more quarters, according to DeMark, and is now at the top of the quarterly Bollinger Band, looking to close this quarter above it. 36.99 is the top of the bands. So now you've traveled from 398 all the way to the middle, no pullback, all the way to the middle of the bands, sideways, all the way to the top of the bands, right? Now what? We'll have to find out. But this chart is parabolic. Parabolic. Above the top of the bands on every single freaking time frame. And has been above the monthly bands essentially since March of this year. A bit extended? I think so. If this was a shit coin, I would scream sell, sell, sell. It's going to zero. Right? Same way that everything else can correct 50%. So can this. All the way back down to 2. She's had no 50% correction. And yeah, she has to at some point. So get it out of your system now, bulls. I mean, dude, they might be going to 5-3. They might be going to this high here before they reverse. No reason not. And really, when you start to look at this, you could even draw this line here to connect to this high here. And now you start to see this picture. Well, once again, this is why I hate Thinkorswim. You can't see any of this crap. But the big picture is, yeah, why not 5? Certainly could, as long as she's above 350, as long as she's above this high. 34.83 in 2 months close. This is a breakout. This is a capture of the 200, a back test, an outside bullish reversal candle. That candle got confirmed. Another breakout. RSI at 76 doesn't matter. This is where the big moves come from. Right? So even ever since she's been oversold, right here, 17.6, she's doubled. Okay, so oversold doesn't mean anything. It means literally nothing. There's no such thing as divergences. Those don't exist. That's you looking at a chart and finding a bias. There's no edge in a divergence. So get that out of your head. So you've got a new high. This is bullish. This is not bearish. Okay? You know, and then same thing here. No divergent high back here. No divergent high. A new high and then collapse. Right? So no divergent low here. A new low in momentum. Even with a higher low, got a new low in momentum. So that's not a divergence. And then a rally. So again, stop with the bias. Just look at the price. It's above everything. Okay. So now that we know that, why is this not above everything? Right? Why are the commodities losing the monthly 10? Why are commodities topping? Now maybe they're just pulling back to 22. Right? Maybe they're coming all the way back down to the 40. But this isn't a good look on the quarterly chart for commodities. That's a reversal candle. And quite frankly, $20 is the bid. And as long as they close the quarter below 25.94, $20 is the target. So why are commodities not going higher anymore? This is positively correlated to TNX, the chart we were just looking at. It looks identical. It looks identical. It hit a low in March 2020, the first quarter, and rallied every quarter since. Literally every single quarter has been higher. Okay, so why is DBC not confirming that now? I would love someone to answer that question. And the only answer I have is it's a non-confirmation. The same way that when you go back to this time frame last year, you have October was the high. The same way that 11.8 breakout, and let's go look at SPY, 11.8, right? 1.3. 11.8, SPY kept marching higher for another month and a half. And was that move confirmed by IWM? 11.8. Nope. Every month lower. Every month lower all the way into that one period. Had already pulled back 25% while SPY was still at all-time high. Those are positively correlated asset classes, and one of them did not confirm the move higher in the other. That's a non-confirmation. You know, that's all it is. This isn't a silver bullet. It's nothing. It's just an observation. You know, when what should happen doesn't. So, let's look at a few more cues. Yeah, why can't this come all the way down here? Well, it can. Absolutely can. We already have a 9. We have a 13. We just put in a 913 TD buy into the weekly 200. But this count is also saying that you could have 4 more weeks of downside. And when we looked at the quarterly chart on the monthly chart in the S&P, it certainly said that there could be 1 more month of downside right into the election. And that's when you'd have the TD9 buy set up on the monthly for the S&P 500. That's when you would have the 913.9 weekly buy set up for the Qs. Right? You still have a divergence here, but again, that doesn't mean anything. What means more is you're in a descending channel. This is a going to zero pattern. The Qs are going to zero. That's what this does. And until she can get out of this channel, she's going to zero. Now, the good part about this is that this channel, 1, 2, 3, 4, 5 touches on the bottom and 3 touches on the top. It's a valid channel. So this isn't a bias. This isn't an opinion. This is a downtrend. It's a descending channel. Price, as long as it remains in this, is going lower. It's that simple. You don't need to overthink it. So what makes it a buy? Touch the bottom of the channel or get outside the top of the channel. What's the top of the channel right now? 300. Where was she back in August? 323, 333, as high as 334. And this structure here, double bottom. All right? And if you look at the dailies, another TD9 buy setup right at the low. Take a look at SMH. One of the leading indicators had already broken the low. SMH broke the July low, but reversed and closed back inside. This is still a double bottom. Now when you look at this quarterly, it's the same picture as SPY. If you look at the monthly, same picture as SPY. Month 8, below the bottom of the band. Are they going to close below the bottom of the band this month? It definitely could happen. And if it does, I don't see why she can't go to 140. I mean, again, 150, 140, 114. Who knows? But the reality is, below this blue line, and the trend is done. It's over. She's below it. Now the month isn't over. All right? And is one close below enough to change the trend? No. But I can tell you right now, she hasn't closed below the 40 since 2010. Right here. She's been above the 40 the entire time. So the transports are signaling that every chart, every sector should break this July low. You look at the transports. This was the trend line, coming right back to it. Sometimes it's just that easy. The gap here at 204 has been filled. There's a gap down here at 187. That's probably the target. And if not 187, again, this is going to go a lot lower for a lot longer. And this is also part of the non-confirmation that I identified earlier. If you're in a bull market, why is it that the transports topped, 6 months before IWM and 9 months before SPY? And you would say, well, that's actually really normal behavior. Okay, and then when I look at this, I see an ABC corrected pattern, which is why we use this fib extension tool. And we've already blown past it. So this can't be corrective. Right? This 1618 we've already hit. That means it's impulsive. So 1, 2, 3, 4, 5. And again, if we get back to the quarterly, it's not a good look. Notice this one's below the 20. So if we're going to get a reversal, the transports need to reverse. They were the first to top. They're going to be the first to bottom. And they have not bottomed yet. They're below the June lows. They're no bid below the June lows. And this is Gap City. 1 gap, 2 gaps, 3 gaps, 4, 5 gaps in the last 2 weeks. That's a liquidity problem. This is trading like a penny stock. And it's the same thing that happened down here when she put in a low. 1 gap, 2 gap, 3 gap, 4 gap. Right? It's Gap City. So it's not what you want. And if you look at this, look how oversold this is. There's no divergences. This is a new low. Shaved off 100 points in a year and a half. $100 in a year and a half. No sign of a bottom anywhere. Right? So until this guy bottoms, the bull thesis is in trouble. But what's the good news about this? Another TD9 buy setup. And if we're really going to draw this sucker out like we did all the other ones, it's possible that you're looking at something like that. It's also possible when you connect the lows, we're looking at that gap that I pointed out earlier around 180s. Yep, right around here, 185. So this is kind of the picture everywhere. There's nowhere to hide. You know, is dollar the place to hide? Sorry. I mean, maybe. But the dollar's now gone from 70 back in 08 to 113, 114. That's a good move. And if you look at this last pullback here, we put in a low, we put in a lower high, then we put in a higher low. Okay, this was the trend change moment. During the, whole COVID crisis and the everything going back to 2016, Trump getting elected and all that. So, we've got a hell of a move. And just like everything else, a 3, 3, 5. ABC up, ABC down, then the 5-wave move can begin. 1, 2, 3, 4, 5. From where I sit, the dollar is topping. The dollar will not go above 115. Let's call it, where's the end of the year? Right here. Yeah, it's not going above 116 before the end of the year. So that's a 1% above current price. So you're telling me I should be in cash for a 1% appreciation? Well, what about inflation? I don't know, man. The cash play seems dead. And if you took the cash play from January 1, 2021, you've missed so much. You've missed so much. And let's talk about some of the stuff you missed. One of my favorites, ENPH. Looking to recycle the quarterly, looking to close above 282.46 on the quarter. If it does that, GG Bears, you're done. This is a reversal at the bottom of the bands. Again, price is contained within the bands 90% of the time. You look at the weekly, we closed below the 10 and we closed below the previous week's low. This does open the 20. It does open a lot of the lower levels. Let's just get rid of some of this stuff off the chart. We want that previous all-time high. And then we want the one from back here. That's exactly right. So in continued weakness, this is the bid. I'm still in from here. I believe. This week or this week. I can't remember. Either way, I think it's like 157 is the entry. I liquidated half up here, and I'm letting the remainder go as long as we're above the 20 on the weekly. Again, you have people screaming that, oh, this is the end. This is '08. This isn't '08. This is 2000. No, this isn't 2000. This is 19. Okay, this is exhausting. Just find stocks that are outperforming. And if you can't do that, then take the stocks that are falling and play them when they're rallying. Even the things that fall the worst, like ARK, still rally a ton. You just have to be able to play the counter trend or play SARK, the inverse ETF. But back to ARK, another 13 count. This thing has been oversold for a long time. Does she have to break the March lows? I think she does. But, again, the market doesn't have to do what I think it has to do. Why can't this be the play? Why can't this be the low? It can. When things decline, right, they go sideways next. That's how this works, right? Went sideways from 2018 to 2020, 2 years, sideways. 44, 44, breakout, distribution, decline. Now we're in the sideways camp again. This goes sideways for a long time. If you look at quarterly, 5 red quarters in a row. Not a good time to be in growth. NVIDIA, one of the top 5 performers going back 5 years. All the way back down to this quarterly gap at 133.48 that was left open from 2021. The rising 20, that's just mean reversion on the quarterly. So again, this thing could come all the way down to 113.43 and that be a strong buy. First time touch the quarterly 20 since 2016. Okay? But I will say, 913.9 sell on the quarterly, nailed it. Nailed the top. Daily, right into supply, right into demand, I'm sorry. Weekly, right into the 200. And the confluence of this trend line. So this to me is my favorite setup. Again, you got to look at SMH to understand why. This has been leading lower since the top. Leading lower, just like IYT, it needs to bottom. So if this is going to bottom, you've got to look at the components inside it to see, are they setting up a bottom? Well, AMD's setting up another bid, should at least rally back to the 20. But is this a bottom? No. It's possible she's losing the 200 and that's that. When I look at this though, I would say this is much, much, much needed bounce on the monthly. Sorry, I really, really dislike the visual. Like, look, how do you even look at this? Anyways, yeah, I mean, again, another TD9 monthly buy setup could be going all the way to the bottom of the bands down here, you know, but there's a gap left open on the monthly at 150. There's a gap on the monthly at 150. Where's 150? Back above the 40. This monthly candle isn't closed yet and is sitting at demand. And when you look at this, this is an ending diagonal. The thing's coiled, ready to go. So that's pretty much all I have. I mean, I will talk a minute on breadth thrusts just to try to give people context. We've seen so many breadth thrusts going back 5 months now, 4 months. The most recent one was percentage of stocks above the 50-day moving average, coming off this low here in July and June. That number hit, a number that hadn't been hit. So, that implied ABC. Okay. Well, that sounds great on paper. But what does that mean from a trading and investing standpoint, right? And we could do this over and over and over again. There's one that Walter Deemer loves to use, the Wiley breadth thrust. Okay, what is that? It's like you rally for 5 days. Okay, well, let's take a look. Every time we've rallied for 5 days, how far were we from risk, right? 1, 2, 3, 4, 5. Okay, so here is our risk level. Here's where we rallied to, 270. My risk is 207. I'm supposed to just buy here? We're back above all the moving averages. Okay, what about here? What about here? We'll just pick another period. 1, 2, 3, 4, 5. Somewhere over here. So I'm supposed to, I could have got in at 160, but now you want me in at 200? Same thing down here. Okay, how many in a row? All right, how about this? 140 to 208. That's a good run. Nope. Right? So from where I sit, whether it's a bull market, a bear market, whatever market you want to call it, it doesn't matter. There's no value in breadth thrusts. The reason I say that is really simple. Why would I go tell you to buy SPY up here when you could just take the double bottom entry where your risk is 362, closes below, let's just call it 350. You're 5% from risk. 6%. Let's say you bought here. You were 9% from risk. Okay, now you waited to buy up here. We got this breadth thrust. We're going to buy up here, right? Hey, I saw a breadth thrust. I'm just going to throw it all back in. Your risk was 14% and you knew it. You knew it was a double bottom set, was the potential. So why are you throwing all your money back in after the breadth thrust that came all the way up here? Why wouldn't you just wait for a double bottom setup? Wait to get all the way to 460, wait for a pullback. I mean, there's so many different ways to play that. But this idea that I'm just going to wait for, 5 days of 90% up days or 290%, it's just nonsense. There's no silver bullet, and even when you do get breadth thrust, there's a high 30% chance that they're going to fail. And that your risk level, i.e., how do I know it's failing, is down here. And your entry's up here. That doesn't seem wise to me. That's why I don't like breadth thrusts. So that's all I got to talk about this week. It's going to be a hell of an end of quarter close, a hell of an end of month close. I do think we start the week with a rally, and we'll see where we go from there. If you like the content, hit the like button, subscribe to the channel, and we'll see you in the next video.